Good afternoon, everyone. I'm so glad that you are here to join us with our Mind Your Business Business Bites. So I hope you will go and grab your bites and come right back because we have an amazing guest for you today. I am so excited. We are going to talk about forming your businesses and what that looks like from doing sole proprietorships, LLCs, S-Corps, and how that impacts your taxes. As all of you know, I'm Holly Whaley, and I am a certified business coach, and I work with aspiring entrepreneurs to help them to design, build, and launch their businesses. And so this topic is extremely important and passionate for me. So I want you to go invite a friend. Grab your lunch and invite a friend because Jim DeBella is going to be with us. He is a CPA that helps do the formation of businesses. And so you don't want to miss this. So I'm going to give you a couple of seconds to share this out to all of those within your sphere of influence so that we can educate you on the best way to build your business. So, without further ado, let me bring on our special guest for today, Jim DeBella. Hi, Jim.
Hello, hello, hello,
Thank you
hello.
for joining us. How are you?
I'm well. I'm well. Thank you for having me. Excited.
Absolutely.
Excited.
We're so excited that you're here.
Beautiful.
We're
Beautiful.
so excited. So, Jim, tell us a little bit about yourself. Tell us who you are, where you are located, all that fun stuff.
Yes. So I am located in Haddon Heights, New Jersey. So South Jersey. And about me. So I've been a CPA for the last 15 years. I graduated college. I went to school down in Florida, went to Florida Atlantic University, got my CPA right out of college, and worked for a local CPA firm for a few years. And then I went public. I went to a big corporate accounting firm. I went to the Price Waterhouse, which is one of the big four.
Mhm.
I was there for about, let's say, almost 10 years, I think around 9 years or so. Um, got a promotion to come up to Philadelphia. I was in Philly for my last 2 years, and then pandemic happened, and the promotional career paths kind of got clogged up. So it was it was disappointing, but also opened the door for me to pursue something I always wanted to do was to start my own firm. So so it's been 4 years now since I've had my own firm and started my own business, and I have around 500 clients now. So things have been well, and I'm super excited about it.
Nice.
Mhm.
I love that. So, I know you and I shared this where we've both come from that corporate arena,
Yeah.
working with the large corporations. What about your experience there prepared you for what you're doing today, besides just the CPA piece? Because I know you do a lot more.
Yeah, I mean, the accounting and tax experience was great. Yeah, by all means, is the best training programs that money could buy. Uh, but the corporate life definitely gave me structure as far as um, it, setting up structure as far as the day to day. Just emails and professionalism, working with clients. It's just that whole the drive to grow because there was constant pressure in the corporate environments.
Yeah.
So when I left the corporate environment, I still had that pressure, but that drive, right? It gave me that drive working in that environment. So coming out on my own, uh, very self-disciplined already, but I could take those intangibles, like management. I was a manager there. This management, the training that I received, and was you know managed a team for a long time. And then coming out, you still have all those intangibles, which are super important. I was trained correctly.
I
Mhm.
think that was probably one of the biggest benefits for me as well with coming out of corporate. It's the training that you receive.
Yeah.
And a lot of times we think when we walk into our businesses, it's going to be so different. But the reality is, all of that is prepping you for going out on your own. So I think it's,
For sure. For
yeah,
sure.
it's
Mhm.
so important. I think a lot of people have misconceptions of starting their own business. And they think it's going to be easy and, it's going to happen overnight. And now with the internet and TikTok, we're going to be famous and make millions of dollars. And, I think we learn as we go. That's not always the case.
For sure. For sure. Definitely amount of self-discipline. And then also, I mean, I've utilized social medias for my business, and it's been, it is free marketing. Uh, but that was fun. I enjoyed that. Being able to implement like social media to growing a business.
Yeah. I think it is fun. I think we have to utilize all the tools that we have available to us. And I will say this, Jim does an amazing job of utilizing social media as a form of marketing. And what he does is actually give you really good information in bite-sized pieces on Instagram. So go out and follow him on Instagram. He does an amazing job. He's always sharing great tips and tricks about finances, tax preparation, all of that fun stuff. And you just get to know him a little bit. So it's great. I love it.
Yeah. Yeah.
I haven't done quite as well.
Consistency. It's
That's it, right?
it's consistency, consistency, consistency. Yes.
Yes, absolutely. Well, thank you, Jim. Let's dive into some of the questions that I know people are really, really interested in knowing. So, how do you know what is the right formation for your particular business? So, how would somebody determine that based on just like I know we find stuff on the internet, but how would they know the best way to form their business?
So, an example that I give for new clients who are just starting a business, have this idea, they want to pursue this stream of revenue. So you can think about a Tommy on your block, right down the street, the teenage kid who cuts your lawn, right? He comes over, he cuts your lawn, you pay him $20. So Tommy is a sole proprietor, right? He's a sole proprietor already, and he has his own business, whether he knows it or not. Okay. As soon as you start performing a service or selling a product and you create that sale, you are a sole proprietor. Okay. Technically, Tommy should report that $20 on his tax return. And that's the way that's how it's presented, right? Any forms of revenue. So you are a sole proprietor right from the get-go. Next steps, right? Your first option is an LLC. Okay. So you have that option to LLC yourself. If it's you and multiple members, you can form that partnership or that multi-member LLC, which is one and the same. Okay. If you were an LLC, a multi-member LLC, you are a partnership. And then you could incorporate, which is like the next step, either an S corporation or a C corporation when you're ready to take that next jump. But everyone is everyone is a sole proprietor from the get-go.
That's interesting. So if we have what I would call, and I know most people would call like a side hustle,
Yeah,
they're actually a sole proprietor. They should be reporting that on their taxes.
they should be, and that's how most businesses start up, is that side hustle,
Right.
especially since pandemic. All the side hustles were coming. A lot of people were doing side hustles, whether that's Uber, and that's a side hustle, or delivering groceries, or like those. That's a sole proprietor, right? You're a 1099 employee, so like that's the start.
Right.
Mm.
So how do you know when it's time to go from that sole proprietor to the LLC?
So it's important to know what an LLC is. There's a lot of misconception about what an LLC is and what it does for you. So when you decide to LLC yourself, to make yourself a limited liability company, right? There's a lot of them out there and they're easy to create. But what does it do for you, right? It's a stamp of approval from the state that you reside in, right? That makes you an official business, and it separates your business from you personally. Okay.
Okay.
So if a client LLCs themselves, the first thing I tell them to do is to open up a business bank account, right? And really create that separation. Okay. So when to do it? When you start bringing in revenue, when you start wanting to taking the business seriously. If you've had a month or two where you've brought in revenue, why not really, create that extra layer of protection for yourself and for this stream of revenue. And from there, you can expand it, you can change it. But that is the initial, that's the first step. And I do recommend LLCing if you have a side hustle, if you have a stream of revenue, okay? Because they can be dissolved easily. It's not a permanent thing. So, but I do recommend it when you start being profitable.
Okay.
Mhm.
And now I have heard I've heard people say that if you're not earning up to a certain amount, you probably shouldn't LLC, because then the government may look at it like it's a hobby versus a business. How do we determine that?
Well, so the government, that's what the IRS says, is it a hobby or is it a business? Right. A hobby would be, fishing, right? So you go out and catch fish and you sell a few, but your expenses are higher than your revenues, right? And that's a conversation I would have with a client, but hey, is this really a business or is this a hobby?
Okay.
Now you create a business for yourself and you're not profitable, right? Say you create a business, you're taking it seriously, you LLC yourself, you're not profitable that first year. That's pretty common, right? There's startup costs, there's costs of going into it, educational costs to even start the business. That's okay. Okay. So 3 years is my kind of sweet spot on where, if you're not profitable after 3 years, you're not showing profits. And then we kind of have a conversation. Is this a hobby? Is this going somewhere? But the intention is super, super important, right? If you intend to be profitable, if you intend for this business to succeed, that's a business.
Right.
Mhm.
Yeah. I love that. Now, is there a number of LLCs you can have?
No, it's unlimited. So you can have as many LLCs as you want, for sure.
Okay,
Mhm.
great. Now, I've heard people say that they're moving their business from an LLC to an S-Corp because there's some tax breaks in there for business owners. When does that make sense? Is that true? Give me some insight on that.
Okay. So an S corporation is a special corporation. Okay. And it's intended for sole proprietors, small business to medium sized business. And it was created to assist taxpayers who are self employed or have a small business. What does it do for you? So, I guess first off, when is it good to make the change? So, my number is around 40,000 in profit. Okay. If I have a business owner who comes to me year after year and they make it over that 40 grand profit mark, we start to have the S Corp conversation. Okay. So, what is an S Corp? So, it's a tax status. Okay. So, you're a LLC and you want to be an S Corp, we make an election with the IRS. So, you would be an LLC taxed as an S corporation. Okay, so technically you're both. You're an LLC who's taxed as an S corporation. Okay, So that's like the first part of it. What does it do for you? So corporations don't pay self-employment tax. So when you become a self-employed person, you have a business, right? You are you need to pay self-employment tax, which is your Social Security and your Medicare, which is 15.3% on the profit of your business. Okay, so before on a tax return, before your standard deduction, your bottom line, you're paying 15%. Okay, the S-Corp status says, hey, IRS, I'd rather be taxed as a corporation rather than an individual. Okay, so your self-employment tax is going to go way down. Okay, why does it go way down? Because you're not paying as much into your Social Security and Medicare. Okay, now there is a reasonable salary part that it gets a little complicated. But I always make the client aware, like, hey, it's not poof, these taxes go away. You're making an election not to pay as much into your Social Security and your Medicare. Does that make sense?
Yep, that makes perfect sense. So it's really about understanding the tax piece and what that really means. And one thing that you said is that you look at it with a client when they get $40,000 profit. Now that's not revenue.
Not revenue.
That's profit. And I want to make that clear to everybody because sometimes they think that revenue and profit are the same things, but it is not.
No, negative. So we're looking for that profit number, that taxable number. Yes.
Right. That taxable number of 40,000, then it might make sense to then make that switch or change. I love that. So when do I need to engage in CPA?
So when to engage with the CPA? Honestly, as early as you feel like that I guess that idea sparks in your head, like, should I work with a CPA? Should I have an accountant? I recommend, even if you don't have your own business, you're an individual, your family, working with a CPA is super, super important. Your tax bill is your highest bill of the year. Most of the time, it's more than your mortgage. So decreasing that number in the smart way, in a strategic way, can be super, super helpful. And the relationship that you create with your CPA, there's so many taxable situations throughout the year. Buying and selling a house, your 401k, or what, maybe you take a distribution, buying and selling stocks, starting a side hustle. There's tax implications for all that stuff, right? And you want to be prepared. You want to be the head of the game. You want to know what's coming if you do these things tax-wise. Because like I said, your tax bill is your highest bill. You may not see that because it's taken out of your paycheck weekly. You're very comfortable with that method of paying your taxes. But if you look on your tax return, you can see how much tax you paid. And there's always a way to kind of mitigate that.
So I often find it's very interesting when we talk about tax preparation, because I often grew up thinking that tax preparation happened, as soon as I got a W-2 in the mail, then we prepared the taxes, and that was the preparation piece, right? But there's really so many different sides to tax preparation and really strategy behind it. How do you normally engage with your clients to help them through like life changes?
Well, and I let them know, like, hey, like, please involve me in any changes that happen throughout the year, because there usually is tax, implications from anything you do. There can be. So what was that? What was the question again? Sorry.
So like when we talk about tax preparation, I want people to really begin to think broader than just, a March deadline, but think about how we can sit with you and build a strategy that will, over the next 5 years, help our family as we go through life transitions.
Yeah. Tax planning is the new thing right now. Finding a CPA that's not only going to just prepare your taxes, but actually plan, for the future, whether it be next year or, like you said, 5 years from now.
Right.
That's the forward thinking that I try to implement with my clients. That's what I enjoy doing. Like, hey, in 2 years, I plan on, moving. I want to sell my house and move into a new one. Or maybe in the next 4 years, I want a rental property. Tax planning is super, super important, because when you want to buy that rental property, what are they going to ask for? They're going to ask for your tax return.
Your taxes.
They're like, hey, can I see your last 3 years of tax returns? So that's always a conversation right from the get-go. What are your future plans? Like, where do you see yourself over the next couple of years? Because your tax return or your loanability is definitely dependent on that tax return.
That's good to know. Now, I do know that I hear a lot of people that get into real estate, whether it's getting real estate to rent it or getting into real estate to flip it, that a lot of times they will build out for each house or for that business an LLC. Is that recommended as well?
That's an option for sure. I have a lot of clients who have rental properties, and the rental properties is in the LLC name, right? Why do they do that? It creates that limited liability, so it's like that extra insurance. It also is gaining credibility for that LLC, right? So that LLC on its own, it's loanable, right? You can borrow money, which is super popular right now, and also it's creating that silo for you. So bringing in revenue and taking expenses out of that particular part of your life.
Okay, that makes sense. So I just want to shift gears a little bit here and talk about the difference between being a W-2 employee versus the self-employed. And I know we talked a little bit about that, but really honing in on that, because a lot of people starting businesses may have both. So what is the difference between being a W-2, being self-employed, and then maybe having both?
Yes. So when you're a W-2 employee, which a lot of us start out as a W-2 employee, when we're in college, we want to work at this company, we want to work at that company, and we become a W-2 employee, usually from the get-go. And when you're a W-2 employee, your taxes become almost out of sight, out of mind, right? You have your withholding happening every paycheck. You have your Social Security getting taken on every paycheck. You have your Medicare taken out of your paycheck. Whatever state you reside in, you have different taxes being taken out. So it's a very comfortable and easy way of paying your taxes, because that's what you do. You're paying your taxes every paycheck. Move to a self-employed person, right? No one's paying your taxes for you anymore, right? So when you're a W-2 employee, the company you're working for is actually paying half of your Social Security. They're paying half of your Medicare. They're helping you with your taxes. You become a self-employed person, you're on the line for all of it. You're paying all your Social Security, all your Medicare, plus the income tax that comes with on your profit. So that's a huge change. That's a huge difference. So tax planning becomes even more important.
Right. Because you really kind of need to prepare for that.
Oh, absolutely. Absolutely. So when a new client comes to me, hey, I'm starting a new business, I'm like, thank you for coming to me now. Right. So I can explain what's going to happen and what we should plan for over the next few months or so. When the client comes to me in March and they have, they're self-employed and they made whatever it is, made $50,000 doing their self-employed work. They haven't paid any taxes yet. Right. Then we're scrambling. All right. You have a $10,000 tax bill now due April 15th. Right. And it's a shock. It usually is a shock. They're like, oh my gosh, like I didn't know it was gonna be that much. That's 20% of what I made. Sometimes that's what it is. Yeah. So I think knowing beforehand is so important.
Yeah, I think that's critical because I have worked with people, and what I typically tell people to do, and you can correct me because I may not be right on my numbers here, but
Mm.
I usually say like you keep 50% for yourself, right? If you get $100, you keep $50, and then the other $50, 25 goes in for your business expenses and 25 for taxes, right?
That's solid. That's solid. Yeah.
Yeah.
That's
So,
conservative. Mhm.
right. And I
Mhm.
figure like at the end of the year, if after you pay your taxes, there's money left over, you can decide either to put it back in the business or give yourself a little bonus, depending on how your business is doing. But that just kind of gives you an easy way to kind of think about it. And I have had numerous clients come back to me year one, year two, even, and say, I didn't realize I needed to take out for my taxes. And I'm like, yes, you did. We talked about it.
Yeah.
That's why. And they're like, I know, but it was easier, right, to now keep that money than to put that money aside. And so I often recommend that people have separate accounts specifically to put that money away where they can't see it,
Mhm.
so that they have the money to pay their taxes because it does sneak up on you.
Mhm. Like a high yield savings account is a great place to put your tax money that you're planning on paying. You don't want to get into the habit of closing out your year and then you're working the first couple months of the next year to pay last year's taxes, which
Right.
is a cycle that it's hard to get out of, right?
Yeah. No, I think that's critical. And I think that we have to have more discussions around that
Yes.
with new business owners. And I think even as I've talked to other accountants and, different people within my sphere, I've heard them say, like, I really wish that the states, whether it's New Jersey or another, other states would have people really like have to go through some type of training so that they understand the implication of what it means to, create this business entity.
Mhm. I didn't learn about taxes until I was in graduate school, or maybe like a senior year of college, right? I had to take taxation classes, and it's super super important, to understand the process of your tax return and understand like what lines mean and what is actually taxable, and where the numbers are coming from.
Right.
And it's sorry to say, but sometimes it's a surprise. Like I had no idea.
Right.
Mhm. Yeah.
Absolutely. I think that happens to too many people, honestly.
Mhm.
I think it happens and then we learn from our mistakes. But if we could take care of it up front so that we don't have that, it would
Mhm.
be easier.
Yeah.
So, for all the aspiring entrepreneurs out there, be sure you put money aside for your taxes
Mhm.
because it does shift. And then when you leave your 9 to 5 job and you move into self employment. I mean, it's different. You don't have the constant paycheck. You don't have, and so then you can almost feel this sense of scarcity. So I have to like hold on to I've got to take all the money for myself, but you're doing your business a disservice.
Yeah.
And so you don't want to get in those cycles. So that's
Mhm.
critical.
Mhm. Mhm.
So, Jim, tell us how people can connect to you, how they can get information. I know you do free consultations, so let everyone know about all of that.
Well, for sure. So, first consultation is always free. We can go over your previous tax return. We can go over your plans for the future. We talk about how we can help each other. You can contact me via website. So it's debellacpa.com. Or, I mean, Instagram, if you would like to follow me, Instagram is great too. So that's Jim DeBella CPA. Okay. Like Holly said, uh, constant, I try to put out at least one video a week, and you can always reach out to me there too.
Awesome.
Mm.
Awesome. Well, thank you so much, Jim. It's been such a pleasure having you on. And certainly, if you have questions, reach out to him. He's a wealth of knowledge. He does, we didn't say this earlier, but he does work in every state within the country. He is licensed and able to assist you. So I know I have clients on the West Coast. He has clients throughout the United States. So if you're in a different region, don't feel like you can't reach out. He is available to you.
Yep. It's the beauty of Zoom.
Absolutely. It is. Well, thank you, Jim. I really appreciate it. Thank you, everyone, for joining us this week for Mind Your Business Business Bites, where we're helping you to mind your business.
Thank you.